Hello traders, it's Thursday, October 5th. This is Alan Hong, market analyst of GKFXPrime. So we're gonna share my daily analysis through this video. And first of all, let's review the major market movement. The first instrument we're referring here is the dollar index in 4-hourly charts. So the US dollar index was weakened on Wednesday, last down 0.7% at 93.479 as investors repositioned ahead of Friday's highly anticipated jobs report, but it was paralyzed on a strong non-manufacturing report. So improving US data along with the prospect of US tax cuts and the likelihood that the Federal Reserve will raise interest rates in December have boosted the US currency in recent weeks. So traders have been cautious this week on the greenback, however, on concerns that recent hurricanes may hurt last month's hiring report. So the dollar pair losses after the Institute of Supply Management's non-manufacturing index rose to its highest level since August 2005 in September, and the price paid index was reached its highest level since February 2012. And other data show that the US private employers was added 135,000 jobs in September, which topping the economist's expectations, even as Hurricane Harvey and Irma significantly impact the smaller retailers. So on the other hand, Federal Reserve Chair Janet Yellen did not comment on the economy or monetary policy in prepared remarks at the Community Banking Conference on Wednesdays. So interest rate futures traders now are pricing in an 83% likelihood of December rates increase, up from 78% on Tuesday. This is according to the CME Group's Federal Reserve Watch tool. So investors now are also adjusting for the likelihood that the US President Donald Trump will point a less hawkish head of the Federal Reserve than previously expected. And according to the political reporters on Tuesday, that Treasury Secretary Steven Mnuchin favors the appointment of Federal Reserve Governor Jerome Powell as Federal Reserve Chair over the former Governor Kevin Warsh, who is seen as more hawkish. So several news reports on Wednesday also show oppositions to Warsh candidacy. Now, the single currencies was added 0.15% to 1.176 on Wednesday, and gains in the euro were kept, however, as the political uncertainty remained front and center in the wake of the Catalonia vote for the independence. The Aussie was fell on worse than expected retail sales on Thursday and traded around 0.7838, down 0.32%, despite a better than expected trade surplus in quiet markets, with the Federal Reserve Chair Janet Yellen refraining from the remarks on monetary policy at a Community Banking Conference in St. Louis. So there are holidays in China, South Korea and Hong Kong for this week, and Australia was reported its trade balance for August with a surplus of Australian dollar 989 billion this morning, and which is wider than the Australian dollar 875 billion surplus expected. So, but the retail sales was slumped 0.6% compared to a 0.3% gain seen on month. And having a tad in commodities markets, the gold price was remained roughly unchanged on Wednesday, fell by 6 cents or 0.03% to traded around $1,277.50 a troy ounce, as the dollar came under pressures following reports that the Norwich Federal Reserve Chair will be appointed next year. So downside momentum in gold prices were kept as the dollar sank following a political report suggesting that US Treasury Secretary Steven Mnuchin favors Federal Reserve Governor Jerome Powell over former Federal Reserve Governor Kevin Warsh as Janet Yellen's replacement when her term as chair expires in February. So Powell is widely billed as less hawkish than Warsh, who has been critical of Federal Reserve bonds buying program in the past. So dollar denominated assets such as gold are sensitive to move in the dollar. A dip in the dollar makes gold cheaper for holders of foreign currencies and thus increase demand. So gold prices could come under pressure later in the sessions, as Federal Reserve Chair Janet Yellen is slated to deliver a speech at 3 o'clock midnight today, and although the speech is scheduled to last only 50 minutes, and traders are expected to closely pass the speech for clues on monetary policy outlook. As for the oil price, it was found lower on Wednesday, with the West Texas Intermediate crude price settled down 44 cents to traded around $49.98 a barrel after a surprising jump in the US crude exports to a record 2 million barrels per day, fans worries about global oversupplies. So according to the Energy Information Administration says on Wednesday, US crude stockpiles was found sharply last week, but the crude exports was rose to 1.98 million barrels per day. So rising US crude production has held down the West Texas Intermediate crude prices, while Brent's price has been heavily influenced by policy directions over output cuts led by the organizations of the petroleum exporting countries. So the concerns among traders is that the heavy increase in US exports, while shale productions continue to rise, will undermine the OPEC-led efforts to reduce supplies. So US crude inventories was found 6 million barrels in the week to September 29th, a much bigger decline than the decrease of 756,000 barrels analysts had expected, and Gulf Coast refinery have been using more crude as they resumed operations after weeks of shutdowns following Hurricane Harvey. So observers said market rebalancing was well underway as a result of strong consumptions and the OPEC-led output cuts. So on Wednesday, OPEC Secretary General Mohammad Bagindo says he was confident his organization could restore sustainable stability to markets, and Russian President Vladimir Putin said he did not exclude an extension of output cuts until the end of 2018, and Russia is part of the supply agreement. So rising oil production in the United States, which is not involved in the deal, has limited price gains. US output hit 9.56 million barrels per day at the end of September, which is the highest level since July 2015, and drillers added 6 oil rigs in the week to September 29th, according to the energy services firm Baker Hughes. So now let's review the highlighted economic data that released on yesterday, Wednesday, as well as today focused data and events. So on Wednesday, the United Kingdom has released its services PMI, the Purchasing Manager Index for the services sectors for September, and it was at 53.6, which is slightly better than the economist forecast at 53.2. So as for the United States side, US has released the IDP non-farm employment change for September, which show a result at 135,000, okay, which is top expectations of the economists as well. So as for ISM non-manufacturing PMI and the crude oil inventory from the United States as well was better than expectations, okay. So as for today, Australia has released its retail sales data for August this morning, and it will show a contracted of negative 0.6%. Okay, so during the late night sessions, European Central Bank is going to publish its account for the monetary policy meetings. Right. So as well as we should focus on the one of the labor data of the United States, which shall show the initial jobless claims, right, of the United States. Its technical analysis sessions. So first instruments, we're referring to the Great British Pound against the US dollar pair in 4 hourly charts. So the sterling is remain low and hovering a tad above the Fibonacci retracement level of 50, which considered as the trend direction shifting freeze home. So falling below this level signal to enter bearish trends and fall further, then we could refer the next support level at 1.312. On the upsides, the first resistance level comes in at 1.331. While the single currency was added to gains, but the upside will come as political uncertainty remained front and center in the wake of Catalonia vote for independence. So the pair EUR-USD retreated from the resistance level of 1.178 and remained traded within the range between 1.17 and 1.178. So referring to the MACD indicator, the both movement lines were narrowing. Additional with the weight momentum, the pair is suggested to be traded ranging further. But however, it remained the downtrend downtrend structures, this closing below the support level at 1.169 is suggesting for further downsides and fall towards the next support level at 1.16. As for the upsides, the nearest resistance level could refer to 1.178, and while European Central Bank is due to publish its account of monetary policy meeting today, so which highly anticipated to bring further clue on the economic outlook. The Kiwi has continued its downsides and fell lower on Wednesday. Currently, it is hovering near to the previous low or the support level of 0.715. So closing below this level will lead to further downsides and fall towards the next support level at 0.71. On the upside, the nearest resistance level can be seen at 0.721. And the Aussie has felt on worse than expected retail sales on Thursday, despite a better than expected trade surplus in the quiet market, with Federal Chair Janet Yellen refraining from remarks on monetary policy at the Community Banking Conference in St. Louis. So the pair AUD USD currently hovering near to the previous low or the support level of 0.782, but however it remained the uptrend structure, thus closing below 0.782 will provide a signal to retrace more in short term. Then we could refer the next support level at 0.773. On the upside, only with a closure above the resistance level of 0.794, we open back the door for continuations of uptrends, and the next target resistance level we could refer to 0.812. The safe haven Japanese yen continued weaker against the dollar, with the parent USD JPY traded near to the recent high at 113.2. So the both moving average lines in 4-hourly charts suggested to remain in an uptrend structure, with both of the lines continue expanding upwards. So thus, closing above 113.3 will provide a signal for continuations of uptrends and surge towards the next resistance level at 114. On the downside, the first support level comes in at 111.9. As for commodities, the gold price remained roughly unchanged on Wednesday as the dollar came under pressure following reports that the Norwich Federal Reserve Chair will be appointed next year. So the precious metal now traded slightly below the Fibonacci retracement level of 50 after it being rejected to surge above. So referring to the MACD indicator, the both movement lines were expanding downwards. Additionally, with the strong downward momentum, it is suggested to drop further following a closure below the support level of $1,262 a troy ounce. So the next support level we can refer to $1,238. And on the upsides, we only could see the bull momentum with a closure above the resistance level at $1,300. But however, traders are focused on the jobs data from US tonight in order to gauge the strength of the labor markets in the United States. Oil price has fell on Wednesday after a surprising jump in US crude exports to a record 2 million barrels per day, and this was feigning worries about global oversupply. So the West Texas Intermediate crude price fell below the support level of $50 a barrel, and this was a signal to retrace more in short term, but remain the uptrend structures. So with a closure below the Fibonacci retracement level of 50 or $49.20 a barrel, is suggesting to shift its trend directions become downtrends, and then it is expected to drop further towards the next support level at $48.40 a barrel. So on the upside, the first resistance level we could refer back to $50 a barrel. To date, please don't forget to subscribe to our YouTube channel by clicking the GKFXPrime logo on the screens in order to follow our updated analysis and education video. Thank you for watching.
GKFX, your global trading partner.